If you ever worked in finance, the market is just the sum of people's choices. And half the choices in the market aren't even made actively. They're made by machines or they're made passively. The other half are made by people who are crazy. If you ever worked at a hedge fund or a mutual fund, there's a lot of crazy people in this industry, and we get it wrong all the time. And the index funds and the quants just magnify the response. They're detecting the signal from the humans. And so the humans make bad signals, and the quants and indexes just follow them a little more rigidly and more profitably, quite frankly. The market is mostly efficient. I mean, I would not. I think so. One of the things I like to say is that, and this sort of boggles the mind of the average retail investor, which sucks. Whenever I meet somebody that's like over-indexed to like cassava, which we're shorting in our channel here, or whatever, I say, okay, here's my biotech list. This is my biopharma list. There are 330 companies on it, and it's very incomplete. There's 336 biotech stocks here, but you are convinced that cassava is it. You're willing to spend all your day on a message board, on a Discord because of cassava is going to go up 100x. You have not looked at a single one of these other ones. You have not eliminated the rest. You don't think there's one stock here that's better? Not one? You haven't looked. How many have you looked at? How much time have you spent on all these stocks? And it's not just cassava, it's Northwest. These guys accused me of being paid by Citadel to bash their stock. Our job as investors is to look at these 336 stocks, and I think for every 10 stocks you look at, one will be mispriced, either long or short. And if you don't short, you're talking about looking at 20 stocks to get one investment. Well, that sounds hard, and I'm lazy, so I'm not going to do that. I'm just going to buy one. I'm going to evaluate one, the first thing somebody tells me that sounds good. I'm not going to really evaluate it. I'm just going to believe in it. That's faith-based investing. A lot of people don't even go to church. They don't have a faith-based life, let alone, they don't believe in God in real life, but they believe that in faith in their investments. I'm an atheist myself, but the point is that, you're trusting your money to a blind process, in essence. You've never heard of 90% of these companies, but you're a biopharma expert all of a sudden that knows that cassava is the right stock. It's insane. That kind of madness is what drives inefficiencies. If you look at cassava, this is a $1.4 billion company worth zero. A lot of these other stocks are efficient. How many times, Chad, do we look at a stock, we do all these calculations, the NPV is exactly the same as the stock price? Most of the time. I think that the more variant perception there is, like fundamental misunderstanding, the more you can get a big win. Like 15, 20 years ago, I worked for Tiger Cub, and here's Eli Lilly. And there was another cub called 𝗕𝗄𝗅. And 𝗕𝗄𝗅 was the guy, Chris 𝗕𝗄𝗅, very wealthy guy. He was at Tiger, one of the most famous hedge funds, a long time ago. And he managed a little hedge fund. We should put him on our hedge fund list. Sort of a legend in investing that a lot of people don't know. And he closed this fund to just have a family office, but he bought a lot of Novo Nordisk. This is 15 years ago. This is Eli Lilly, by the way. Eli Lilly's been working on GLPs since they came out. GLPs came out in 2004, 2005. The first GLP was launched. They've been studied since around 99. They launched their first GLP-1 with amylin. Then they dumped amylin to make dulaglutide or Trulicity. Trulicity came out and started doing well. It was when Mounjaro came out, tirzepatide, that this run started. Novo, which 𝗕𝗄𝗅 bought, and I didn't understand it at the time. I basically said, how big could the type 2 market be? How big could the obesity market be? The obesity market was just a dog of a market for a long time. So here it is in the early 2000s, right around this time. Novo Nordisk was $1. This was 100x ago. And I looked at it and I said, nah, how big could it be? How big could it get? And we knew all about GLPs. We knew back then it was called Victoza. Okay? So, and I wasn't alone. So you have smart money. I'm really going to disparage myself here. This is 100 goons at Citadel. This is Warren Buffett, 𝗏𝗏, so he doesn't hate me. It's 2 T's. And we look at Novo Nordisk. It's $1.50. It's 2005. And we say, nah. And today, it's $130. At the time, this was all Wall Street. Nobody believed in this. There was one guy that did. So you guys don't think I'm stupid, right? You don't think Steve Cohen's analysts are stupid, or Citadel's, or Millennium's, or anyone else's. You don't think Warren Buffett's stupid. We all said no to Novo Nordisk, all of us. So this stock sucks. It's a dog. It's an insulin company. Yeah, they're getting into GLP, but that'll just cannibalize their insulin business. So what? You know what we all said? There's DPP4s. There's SGLT2s. Why would anybody need a GLP? It's all right. You lose a little bit of weight, but it's an injection, and these guys are pills, and it's not that much weight loss, and this and that. You made 100 times your money in the best stock ever. You're telling me that if you go back in time and say, would I have noticed, cover up all the details, get all the press releases from 2005, okay? Novo Nordisk. All the press releases, all the data, all the annual reports, you name it. Would you have seen this? That is what a good investor is. A good investor in 2005 would have seen the Novo Nordisk, because if you can't see a 100-bagger, how are you supposed to see a 2-bagger or a 3-bagger? Right? We get excited when a stock is a triple here, right? We get excited when a stock is a double. Look how excited I got at Robinhood or Chegg. I got so excited at Chegg, I'm thinking about buying the whole company for a double or a triple. This was 100x practically. And I didn't see it, and I'm an expert in pharma. Now, back then, I wasn't as much of an expert as I am today. I had less experience. Maybe I would have seen it today. But back then, I said, nah, I'm too smart for this. Too much competition. This market's going to be very split between DPP4s, SGLT2s, GLPs. There's lots of GLPs. Novo's not going to be the only GLP. I was an idiot. All the entrepreneurial I've done, all the trades I've made, I could have literally put $1 million in Novo Nordisk and been just as well off, if not better off. $500,000 in Novo Nordisk. But I wanted to trade everything else. And I had some other winners, but nothing like this. When we used to talk about markets being inefficient, all of Wall Street looked at this, everyone, and said, nah. Even after GLP started taking off, we all still said, nah, it's just a fad. But it was the next generation of GLPs that did even better. That's what we missed. What we didn't understand is the product profile could improve. And the reason we didn't understand that is because that doesn't happen in pharma. It's pretty rare for the GLP, the first GLP-1, exenatide, had basically no weight loss. Maybe like 1 pound, 2 pounds. Then we went to the next generation. And for Novo Nordisk, they basically skipped a generation. The next generation, you could argue, is dulaglutide. And it was actually impressive. Friends and I would joke about it. It's all right, hey, you can lose 10 pounds on that thing. Try it out. Fat people could lose 20. It's not bad. But man, by the time we got to 3rd generation, or what for Novo was 2nd generation, with tirzepatide, this thing's more of a quantum leap, 20 to 40 pounds. It tends not to happen in pharma, although if you think about it, it does happen sometimes. Look at steroids, right? Cortisone, what's like a middle steroid? All the way to, prednisone, I guess, all the way to dexamethasone. So it can happen. You can make more potent drugs. We didn't really think of that. We just we're stuck in this idea that, potency is potency. Yeah, and there's more, there's going to be a 4th gen and 5th gen. So those kinds of things give me nightmares, but they also give me hope that the market's inefficient. And, there's plenty of examples on the other way around, stocks that have gone down. But it's sobering to look at the 2004, 2005. I was on Wall Street. I worked every day, every night. And Novo Nordisk was $1.30, ended the year at $1.80. And, I probably at some point thought this through and said, it's already gone up too much. It's $1.80. Which I only sold at $5 anyway, so I'm kidding. Yeah, no, Regeneron, I was the same. I was short Regeneron way back when. I knew everything about GLPs, everything. Exenatide, I'd studied since '99. I knew exenatide from Kramer. Makes me want to close down everything and stop the stream. So yeah, you can still find cheap stocks, even if they're 20 billion. By definition, most people will miss the big idea. That's why it's a big idea. Robinhood isn't a huge idea, but it's basically this idea that most brokerages don't cater to high velocity clients. that don't have much capital, and they do. And those customers are they seem like they're not that valuable. They're actually way more valuable than the rich customer who's never trading. Smart customer's not trading much. Smart customer's he's not doing anything. He's not trying to beat the market. He's got $1 million. That $1 million customer is not worth anything close to a $50,000 customer or $50,000 customers on Robinhood, because they're turning their account like banshees. They're trading. They're possessed. They're refilling their account when they lose. I mean, these guys are wild. That's the big idea in Robinhood that the market doesn't and didn't understand. I know my company's going to 100 bag. It's already bagged a bunch. What's a 100 bagger for us is only from our start is not much. A couple billion valuation. So I'm investing in myself. But stocks out there, other people's stocks, I mean, a lot of it is ground floor. You're just taking a shot on a person more than anything else. You know what's an interesting one? This company. This could be a 1,000 bagger. It's privately held. This is the guy. He may be the next coming. This is possibly your next Elon, your next Palmer. Does he look like it? Does he look like the future richest person in the world? Market looks overvalued. You know, there are times where like broad asset classes are overvalued. It happens, obviously, and you have to be careful and mindful of it. But at the same time, like, are you a macro magician or are you a stock picking stunner? You have to decide. You know, I don't think you can be both. I don't know many people that do both. I'm trying to be a number one stunner. OpenAI is maybe the best startup of all time. You know, at least top 5. So it's very hard to criticize the company and its management. You know, I'm a results-driven person. So when people criticize OpenAI, it's really bizarre to me, because it's like, well, maybe if you're Bill Gates or like Sergey Brin or someone, you could criticize OpenAI, but it's pretty difficult to, you got to have a lot of chutzpah to sort of say, oh, OpenAI is, you know, doing something wrong or this or that. You know, when you get to from 0 to, you know, almost 200 billion in a couple of years, you really can't fault, you know, any decision. Obviously, like all companies, they've had their challenges, and a lot of their challenges sort of have ended up in the newspaper. But I think that the company kind of going back to for profit and the company sticking to the traditional business sort of paradigm, you know, makes sense for them to do. And I think Sam should have equity in the company. It doesn't make sense that he doesn't. Shareholders want that. You know, what you want, you're not a part of this. Stockholders of OpenAI want the leader of OpenAI to be incentivized. That makes sense. There's nothing wrong with that. Sam is the leader of the company. You know, there's no doubt about that. If you have a doubt about that, hopefully you don't have a doubt today. Ultimately, you know, he has led a company that has done amazing things. Whether it's 𝗏 GPT in the first place, the business deals that they have with other businesses like Microsoft and Apple are nothing short of incredible. You know, if you put GPT in my lap, I'm not sure I could have pulled all that off. I'm not sure you could have pulled all that off. This is an incredible tale of execution. The API business was execution. The consumer product was execution, which wasn't even intended. Good management finds ways to get these call options, and they've missed on a couple call options. The agents and the, you know, I mean, they started off in RL and didn't really do much in RL other than laboratory work. And now, you know, it's this massive business, and you can't ignore that. These things are just going to come around by accident. And, you know, it's really incredible work. In terms of people leaving, now, if you've ever managed a company, the turnover here is a little higher than normal. It'll certainly acknowledge that. But at the end of the day, there's a couple things I'll say here. I don't want to offend anybody, but I probably will. The first thing I'd say is there's a very different staff required for a $1 billion company. For a startup, a $1 billion company, and a $100 billion company. Probably every order of magnitude requires pretty different people typically. There are atypical situations like Facebook, which had a good CEO throughout, but even with Zuck, you noticed there were some transitions there that were difficult. It was hard for him to go from sort of PR Zuck to mega cap Zuck. And now he's sort of startup Zuck to PR Zuck was a difficult transition. PR Zuck to mega cap Zuck was really difficult. And now he's sort of transcending from mega cap Zuck to like based Zuck. And the point is that, most companies would have had 3 or 4 different CEOs, but he had this sort of super voting share. So, ultimately, yeah, founder mode is kind of the way to look at it for sure. But the people at the company who have accomplished a lot of them are now millionaires, billionaires, someone like Amiira is probably worth hundreds of millions of dollars, if not more. And, others at the company, congratulate Barrett on his next steps and many others. Like, these are really brilliant people that have changed the world. And whether the initiation of the leaving comes from them or comes from management, it doesn't really matter. People are going to be fine, very rich. They got almost, generational wealth. The resume is about as good as it gets. And if management initiates the transition, ultimately it might be because that person may not be the kind of person that either wants to be subconsciously or not at a large entity, a $100 billion company. It's a lot less fun. Startups are fun. Being at a $100, $200 billion company dealing with compliance, not fun. It's a bit of a pain in the ass. So I think that, people do change after they make hundreds of millions of dollars. And quite frankly, I do think that sometimes you need to be ahead of that change. I've seen a lot of people, once even they make a couple $1 million, they start to change the way their lifestyle works, can get to their head. And you really don't want executives like that. I can't imagine what it's like to have a $1 billion not go to your head. Sam's going to be worth 10, 15, $20 billion very soon. He's already very wealthy. So for him, I think it's less of a change. But for a lot of the other people at OpenAI, it can't be easy as management to manage through that transition of folks making tons of money, especially if they took some money off the table in the secondary and stuff like that. So a bunch of people, I'd say, would have thought about, okay, well, here's a bunch of money in the secondary, maybe I'll put 25 million in the bank or whatever. And, my urgency has changed. O1 is out, voice is out. We shipped the best products anybody's ever seen in tech. Life-changing, world-changing products. You got Biden telling the UN the world will never be the same. It's true. So, nobody should be criticizing the company. If these people want to leave and start a new challenge, maybe take a couple of years off after, what mountain do you have left to climb? A lot of people work for the challenge. A lot of people work for the money. A lot of people don't work for either of those. But the point is that for some people, I don't have names specifically, but I can just imagine from my own experience, some people might say, look, I made a fortune. I'm 35, I'm 40, whatever it is. Maybe I'm 30. I want to start a new chapter in my life where I do something else. Start a family. I've been working till midnight every night, 7 days a week. I need a break, and I made this money. Nobody can take it away. I want to try something else. So I've been here 5, 6, 7 years. This totally makes sense. And I think the question should be asked of everyone every year in performance reviews and stuff like that. I think that the problem is people will want to leave consciously or subconsciously, and they don't for years at a time. I'm thinking about retiring, doesn't that? It's like, look, if you're thinking about retiring, just do it. We're a high performance organization. Time to do something else. And I think that kind of approach is probably one of the best managements take. For example, I think like OpenAI, and make no mistake, despite some public gaffes and stuff like that, this is one of the best managements in the business.